Hi you guys, welcome back to the channel. My name is Brad. This is the Firefighter's Financial Toolbox. The stock market and how bad it was earlier in the year with the pandemic and how drastically it dropped. I decided that I wanted to sit down and look at all of my brokerage ETFs. I wanted to take a look at exactly how each one of them has done so far this year. Now we're about 8 months into the year, so I decided to take a quick look and see how each one has done over the course of this 8 months. So first let's start with we're going to start with the US stocks, and we're going to start with large cap first. So I have the iShares S&P 1500 Total Stock Market Index ETF, ticker symbol ITOT. And that is basically the 1,500 largest companies, you guys. So it's a large cap ETF. That one is up. For the year, it's up 3.229%. So even though we lost about 35% at one point this year, we're still up overall. Second one I have is the VV, which is the Vanguard Large Cap ETF. This is one that's very similar to VOO. In fact, I used that as a tax loss harvesting partner 2 years ago, which is why I have this instead of VOO currently. That one is up 4.27% overall for the year, you guys. So the large American companies are coming back. Now let's take a look at my small cap. Now the only ETF I have in my taxable is VBK, which is the small cap growth ETF. That is actually up 7.62% for the year. Now, obviously that's a very volatile ETF. It goes up and down a lot during the short term, but overall it's up for the year over 7.5%. What about my dividend ETFs? You go, everybody seems to be into dividend investing now, and I think there's a good place for it. And I have two. I have the Vanguard High Dividend Yield ETF. That's ticker symbol VYM. That's my biggest loser so far this year, you guys. That one is down 10.83% for the year. Still paying the dividends, don't get me wrong, but overall the stock price of that one is down dramatically. The other one I have is VIG, and that's the Vanguard Dividend Appreciation ETF. It's also a dividend ETF, but they use companies that are more growing and still paying a dividend. That one's up 1.73%, so minimal growth in the actual price of the ETF, but we are getting the dividends as well. Now I use those two as tax loss harvesting partners. The reason I bought into VIG was when we had the big loss back at towards the end of March. I sold out my VYM, or a lot of it, and bought VIG so I could take some of those losses and use them to offset my taxes. Last one we have to talk about is my international ETF, and that is VEA, the Vanguard FTSE Developed Market Index. That's also a big loser, you guys. International has been, for about 6 or 7 years, has been in the toilet. That one's down 7.485% for the year. Now, it was down quite a bit further than that. It has come back a little bit recently, but this is another one that when we had the big drop, I sold what I used to have, which was VEU, and bought in to VEA. So personally, I'm not really down that far, but to keep apples and oranges, I'm comparing everything from the beginning of the year through about August 8th of this year. So what does it mean for me? It means that even when I look at the short term, and even 8 months, you guys, is short term. You should be thinking about these investments for 10 years, 20 years, and in some cases 30 years. Even after you retire, remember, these are still going to grow for you, and you're going to take money from them, but they are going to appreciate. But even with the dramatic, and remember at the time, there were some weeks where the stock market lost more than it ever had in that short of a period this year. So overall, to be up on all but 2 of my ETFs in my taxable account is a pretty good sign. Now, what's going to happen in the future? None of us know. I don't know. I don't pretend to say that I would know. But it reinsures my buy and hold investing strategy, you guys. Now, I do as you saw in the taxable account, when there's losses, I do sometimes lock them in, but I also buy a similar ETF so that I'm not out of the stock market when it comes back. If you buy and put it in cash and hold it, you're losing out on those returns. So buy your investments, plan long term, hold your investments, and watch the money grow. All right, you guys, thanks a lot for watching. If you got something out of this, do me a favor, drop me a like. If you're not already subscribed, you guys, hit the red button, ring the bell. You get notified whenever I make a video. I make at least 1 or 2 a week, and we'll see you again. Thanks.